This is Mark Carrington from mybitcoinprofits.com with the weekly review on Bitcoin trading and the Bitcoin price. You'll remember we last talked on April the 28th, so it's more than a week ago, and we'd seen the breakout of the triangle, and I'd suggested that we were looking for levels for the Bitcoin price to reverse from. So let's go to the charts and let's see what has actually happened. So we have here, as always, the Bitcoin against the US dollar, and it's a daily chart. And you will remember we've had this triangle drawn in, and the price had broken out, and it kept running hard, and then it pulled back to this level, and I'd drawn in this trading zone, which is this blue rectangle. And I had suggested that one could explore entering this on a 4-hourly chart if you were comfortable that it was actually going to reverse. The risk always of going into a 4-hourly is it does a false reversal and then continues tracking down. But these levels were reasonably strong for one to consider making such a trade. So I'm just going to blow the chart up a bit more so we can actually see what actually happened on this particular day. Remember, so our zone here was drawn in on the 0.5 to the 0.786. I was kind of hoping it was going to pull back right back to here, but it did not, and we had this bar here. I'm going to remove these zones now, so I don't really need them. And this bar here is a very classic low test bar. So we see the price has opened here, it's run up, it's run down, or it probably ran down and then ran up, and it closed near the top of the bar. So the open and the close are in the top half of the bar. So this is one of the three forms of reversal that I'm quite comfortable with. So then one could have entered at this level here, up above the top of this bar, or for a more conservative trade is to actually wait for a confirmation that that high is taken out and enter up above here. And for that entry, for both entries, the stop loss would be down here. Now, as it happens, I actually did enter that trade, and I entered it on the 4-hourly chart, and I will pull across the trade information and then just have a look and see, how smart a trade it actually was and what the problems of the trade are. So here comes the 4-hourly chart. So we'll see here, this is actually my trade is a mini Bitcoin, so one contract here is the equivalent of 10 Bitcoin. And we'll see that same shape, the breakdown and the low test, and then basically what you want to do is enter above the high of this bar. So once the high of that bar is taken out, and you'll see the blue line here is where my entry is, so at 449.17. So it was a little bit past the high of that bar, but it did require some patience to sit and wait for this to break that level. Now one could have also gone down onto the 1-hour chart and said, do I actually want to enter there? And the reason for looking at considering that is this is a low test bar as well. So this level that it was testing here was an important level, because that low test bar on the 4-hour mirrors the one on the daily. So there's my trade entry, and my stop loss, and choosing a stop loss is really quite important. One could put a stop loss here, or one could put a stop loss behind the previous areas of safety. So one could put it here, And you'll actually see on this chart that my stop loss has actually gone down right under here at 415. Now that's predicated on being the amount of money that I'm prepared to lose in case this trade goes wrong. And that would have been 1% of my account I'm prepared to lose. So that's why that stop loss is actually quite a bit further away than the technical analysis would suggest. But it is done on the principle of being behind that level of safety. So if we have a look on the daily chart, see where is 415? 415 is way down here. So it's behind this. This is a reversal we entered on. It's behind this here, and it is somewhere over here. So it's below that reversal, but above this area of consolidation here. So that's the choice of stop loss. Because the next thing we have to work through is what is our target? Do we have a target price, and how to choose a target price? And the next is how to manage the stop loss strategy as we go forward. But let's just go firstly, let's think about a target. And one of the ways of choosing a target is to use a Fibonacci extension, run it from the previous cycle, so from that high to that low, which is the low we entered on, and then choose a Fibonacci extension level. So you'll see here several levels. There's a level of 1.27, there's a level of 1.618, and one could then say, well, I expect it to reach that level and then pull back. And that's typically what we'll see, is the price will run like this and it'll pull back. It may give us another entry here. Sometimes it'll run through, pull back a little bit, and then run strongly up to there and pull back. And without any other information, that's about the best one can view. And of course what we can actually do is just have a look at previous pullbacks and to see what they've actually done. And we don't really have this one here, it didn't pull back as far. This one here, so there's one there. So if we just go measure this one here and see how far it went before it turned down, and it went to somewhere between the 1272 and the 168. So our conservative target would be 1.27. An aggressive target, I would think, would be a 1.618. And one can do, depending on how the trade is configured, is one could take half off at this point and then move stop loss up to break even. Remember that my break even is at 449, which is at this level, so my trade is now in profit. So that's the first discussion. So we could set a target at, say, 480, thereabouts, 470, 475, maybe 480. There is another way of thinking about how to manage a trade, and one of my coaches used to talk about letting the market take you out of the trade, and he'd do that by managing stop losses. So if we take the current situation is that my stop loss is hidden behind this strong horizontal level. It's a very conservative stop loss, but it is consistent with my trade management policy. So one of the ways of moving stop losses, it's also a reversal. So one of the ways of moving stop losses is to progressively move them behind each reversal. So this is the bar that we entered on, and given that we've now had a higher low past the bottom of that bar, we could move the stop loss behind that bar. And this one here is also a clear reversal, so we could move the stop loss behind that bar and sit and hide behind that level that's come off a daily chart. There are no reversals here, although one could argue this is a bullish engulfing bar because the price has opened, it's gone down, it's taken out this low here, and it is run up higher. So this is a reversal as well, and it is also creating something of a horizontal level. We could also have chosen to put it behind this horizontal level once we get a higher high after that level. So we could put this stop loss here. Now let's just have a look at that that stop loss and understand that in the context of my trade. If you remember my trade, we went in at a level of 449, and this number here on the right hand side is 448.66. So if I was to move that stop loss behind that bullish engulfing bar, my trade would be better than break even, so I could not lose on the trade other than trading cost. I am a little bit concerned though is that this high here is lower than this high here, so there may well be a strong level of resistance on this line which we've drawn off a weekly chart some time ago. So that would encourage me to do one of two things: either leave the trade as it is and wait until that is broken through, or move the stop loss to this break-even level, or even reduce the size of the trade if I can actually do that. And it's something for me to think through as I look at this. I do have a strong bias that the price is going to continue moving upwards. We do have the halving event coming in the next 2 months. What the halving is going to do is basically this. What that means is that for every block that is mined, there will be half the number of Bitcoin released compared to what is being released at the moment. So the supply of new Bitcoin onto the market is going to reduce. It also means that the cost of production on a per unit basis is going to increase, and that would tend to increase the price of Bitcoin after the halving event. And we've seen in previous halvings that within a period of time of 3, 4, 5, 6 weeks after the halving event, the price does move upwards. So my bias is, because I've got a bias long, I may not move that stop loss, but the stop loss strategy there is clear. Now, to be consistent with what we've done in the past, it'd probably be a good idea, or it's always a good idea, to have a look and see what the momentum indicators are telling us. It's also a refresher on some of the techniques. And so the first one, as always, is MACD. So we'll see here that MACD is firmly bullish. So it's above zero, so it is bullish. It's done its retrace, it's done its crossover, it's flattened out, and it is now turned upwards, and it is about to cross back over again. So that is encouraging me to say that the momentum is consistent with the price continuing to move upwards. Now if I have a look at the stochastic, and just to see where we are compared to the risk of being overbought or oversold, and we'll see here, remember last time we talked about this being overbought over here, pulled back beautifully, and we've turned, and it is now heading back into the overbought territory. So there's still some way to go, so not concerned yet about this pullback. My sense is that there is still enough momentum for the price to reach up to this horizontal level. That may well be where the momentum runs out. Now, what else is going on in currency markets, and it is also of some relevance, and I'm going to look at one chart. I'm going to look at the dollar index. So this is the index of the US dollar, it's a basket of currencies against the US dollar. And what we've seen over from early December last year, the dollar index has been trending downwards. And we draw that particularly from the start of the year. It has been trending downwards, and it's running in a channel. So let's just draw the channel in. You can see it's firmly running in a channel, and it may have reached, it's certainly reaching to the bottom of the channel, but particularly this bar here is important, because this bar is a low test bar at the bottom of the channel. So what we're starting to see is that the dollar is strengthening. It's gone from this oversold position and it is strengthening. What we don't know is if it's going to do what it's been doing previously, or whether it is actually going to break out. But this change here is important, and that may have implications for the way Bitcoin trades. So it's a bit of a red flag that is coming up in my mind. If we look against Bitcoin against the Chinese renminbi, or against the Chinese yuan, this chart is actually a little more comfortable than the US Bitcoin against the US dollar chart. And the reason it's more comfortable is we've got that same pullback, and it is run up here, but this high and this high and this high are all higher highs, and the lows are all higher lows. So this is trending upward. It does not have that same discomfort as we're seeing on the Bitcoin against the US dollar. We do have to clear this level. And remember though, this level is higher than this level. So if we clear this level, this is going to keep running. So that's one of the other factors that telling me the Bitcoin against the US dollar will continue running, or can continue running. And then lastly, just to cover where we are on Ethereum, we talked about where Ethereum was trading. Given that it had broken out below the trend line, it is now tested back on that trend line. It's made a break above that trend line, and it is now pulled back, and it's into a consolidation stage. It's absolutely impossible to tell where this is going to go next. My guess, especially looking at this stochastic indicator, is that this is going to do this. It may trend downwards before it decides whether it's going to do this or this. So I'm absolutely not looking at trading Ethereum. I'd far rather be mining it and holding it, which is what my strategy is on Ethereum. So there we are. There's our review. Happy Bitcoining and happy trading.